Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. As always, we have a lot to cover in this video. It is the 1st of May, and there is that saying out there for the market, sell in May and come back and St. Leger's Day. Now, this is typically because fund managers look to take profits as they don't want to hold over this time period, or actually, in some cases, it's just not worth it for them to do so. This is something that you do see play out in the markets. The question is, will it play out now? And will it play out at a time where the very thing that people usually sell out of and go into, which is the dollar, is in question? And we're going to do a number of things in this video. We will look at the technicals. You guys know the plan that we have in place. Ultimately, we have a head and shoulders, an inverse head and shoulders that we think is going to take us to the upside. And the point of invalidation here, of course, would be the run of the right shoulder, but a retest of the neckline I still think would be healthy, but a move that took the neckline with momentum would sort of tell us that the ground that we're on is shaky. So we're still bulls. We've been bullish since the start of the year after being bearish in 2022. We're not necessarily hodlers, but we think there's times to hodl and there's times to not. And I think now generally is a time to hodl cryptos. So I think altcoins are at decent prices, blah. So we will look a little bit at the technicals. It is going to be an insane week with things going on. This is central bank rate decisions this week. You've got the Fed, you've got the ECB, you've got Brazil, you've got Australia, Malaysia, which is one that we don't really speak about. And there's a number of other things going on, like the US non-farm payroll, which of course is going to come out Friday. Now, it's very much make or break for the dollar moving away for Bitcoin. And that's going into a rate decision and a non-farm payroll. Now, the dollar doesn't look too bad today in my just a quick take. You know, I wouldn't short that. I'd certainly wait for some sort of a break of this. But the dollar more broadly, I think, is in a more of a broad downtrend. And I think the only thing that spikes the dollar is mass fear. And I don't think fear comes till later on. You know, I am in the hard landing camp. I just think there's a window of opportunity right now. And we've done lots of looking at this with the yield curve, with the 2-year US yields in comparison with the Fed funds and where I think they're at and what that means. And actually, with the rate decision that we've got, so just quickly looking at the data before we get into everything else. Today, of course, is a UK spring bank holiday. So there'll be some of you that are off. Hopefully you're enjoying your day off. And then we've got the Bank of Australia's rate decision on Tuesday. We've got the FOMC rate decision on Wednesday. And then we've got the ECB rate decision on Thursday. And we've got non-farm on Friday. So it's going to be a very volatile week for the dollar. I think we've also got some big earnings like Apple and such, which is going to be interesting. Going into this week, we're seeing dollar strength, we're seeing gold weakness, we're seeing equity weakness, and we're seeing, of course, crypto weakness. But this could change on one data point. So this is going to be one of those things that we're going to have to watch and see what happens. And, of course, we'll report on it as we go along. But ultimately, for us, we have upside targets for Bitcoin that we think get hit, and very much, you know, looking at the position to re-enter the markets here, do think that could be the bottom for Bitcoin, generally. Now, whether that is for smaller altcoins, which haven't done as much as Bitcoin, it's still to be seen. But I think actually January 2023 would have been a great month for buying crypto. Certainly in hindsight, it's been that thus far. And I think over time, that'll be proven to be correct. But we will see. So it's going to be a very, very volatile week. I want to play a clip from Stan Druckenmiller. Now, Stan Druckenmiller has a 30-year track record of offering 30% return. That's unheard of with no losing years, which is pretty damn amazing, to be quite honest with you. So he's also, or was, George Soros's right-hand man, somebody that should have a large degree of credibility. And we're going to play this clip of him talking about the only conviction that he has is that he's short dollars and long gold. So it's very interesting. He also talks about how you can't really trust the Fed right now because it should be a simple play. If we think that shit's coming down the line, you want to go into fixed income. However, you can't really trust the fixed income given the response of Silicon Valley Bank and the kind of bailout and the wiping out of the quantitative tightening that we saw. And that's, it's very interesting what he was saying. And I think he sums up the environment very, very well. First Republic seized by California regulators. JP Morgan to assume all deposits. First Republic is second largest bank failure in the US history. FDIC estimates a $13 billion loss of deposit insurance. First Republic, 84 offices to reopen on Monday. So basically, JP Morgan have overtaken them. I think First Republic actually had a bailout not that long ago to the tune of about 30 billion, and this has still happened. And is there going to be more of this taking place is the real question. And how's this going to steer the markets? I think the markets actually benefited from the likes of Silicon Valley Bank. And I think they were looking to do the same thing from First Republic. And now there's maybe being a bit of a kind of quieting of that. So that's just a bit of interesting news. Let's play the clip from Stan Druckenmiller, and then we'll finish on some crypto news. Remember, we do have the halvening in around about a year's time. And we can look at the halvening and what that means and what it does in just a second. So let's go ahead and play the gold and dollar clip.
On a relative basis, the tightening in the U.S. going forward will not be as much as the foreigners now that we've weaponized the dollar, and you've got people like Lula running around asking why we need to be trading in U.S. dollars. By the way, it's not a bad question. Historically, we could be trusted. We had a rule of law, a lot of things. So about the only space I have any risk on right now is in the U.S. dollar. Don't run out in short dollars. I could change my mind in a week. But that's where I am right now, and I'm also long gold, obviously, for the same reasons.
So I think you have to watch the whole interview. Talks about a hard landing. It's a very tricky environment for a number of reasons. One of the main reasons is the dollar's never been under so much scrutiny and abandonment. You're seeing, talk about BRICS, talk about, even the French president coming out and saying that he's going to start doing deals with China and yuan. This is a very interesting time because the dollar's status is being threatened. And this is what I mean with sell in May. You're going to sell in May and go into dollars, which may also be a short. Very interesting, and I wonder how this is going to play out. Now, May does typically play out. It kind of creates a bit of a rainy season for the markets, but we'll see. We'll watch the markets. It's going to be a very interesting week. Stan talked about how other banks were going to tighten more than the US. We'll see if this becomes the case. And if you look at dollar trends, they usually are long-lasting. So we'll see. We'll see what happens. I could definitely see the dollar rolling over and putting a new low. We did look at maybe this is a bit of a head and shoulders. Although you've got a bit of a stronger right shoulder, which isn't great. There's lots of scenarios for the dollar, but I think the dollar goes down. I ultimately think this year, short dollars, long Bitcoin and gold. And I even think the equity market may do okay. We had looked at something like this. Maybe you're setting up some sort of a bull flag. I think the dollar's looking to roll. And over there, you've got one of the world's greatest investors looking at that position also. But also saying, these things can change. And of course, that's the nature of the environment that we're in. It's very much data-driven. You're seeing data constantly readjust. I don't think crypto Twitter and crypto YouTube has ever been so into the kind of macro and following all this traditional financial news as closely as it has over the past 2 years. Or 3 years, you could say. But this is the nature of the beast that we're in right now. But there's lots of great things happening within the crypto space. We saw the hearing where Gensler got a grilling. That was one of the most bullish moments for me ever as a crypto enthusiast and someone that thinks this space is going to do very well over time. MasterCard to accelerate Bitcoin and crypto card adoption throughout more partnerships and crypto firms. Remember, the government have 205,000 Bitcoin. This is something we looked at and may do a little bit more of an in-depth dive on. Because they did sell, I think they sold in March about 6,000 Bitcoin. They could sell. There are also many of other governments that have Bitcoin. And we'll see what the US dollar do with this. And just to sort of wrap things up, guys, there's a number of reasons why I'm bullish. One that's coming more and more into focus is the halvening. I think the halvening and the Bitcoin 4-year cycle theory is very much repeating. This is a messy chart. And actually looking at the Brave new liquid coin index, you know, are we going to see history repeat? These lines horizontally down the chart are the halvenings, and you can see what happens to the run up into the halvening, you know, because of obviously, you know, this is what the 4-year cycle theory is centered around, supply and demand. We will see. I think you're going to get a choppy day today. It could even be quite a down day going into the rate hikes. And certainly going into Wednesday, people are going to be a little bit pussyfooting around it. However, I think 25's a given. And actually, if you look at the 2-year yields as a good kind of measure for what's happened previously, 25 basis points is very much in line with what we think's to come. And I'll show you guys this. If anybody's interested in joining my Patreon, there's a link in the description. It is a new month. It is well worth it. You know, if you want to take your investment journey seriously, we're very accurate on the markets for quite a while now, and hopefully we can continue to do so. But the 2-year typically tops, and then rates go up by about 25 basis points. That's been the thing that has happened essentially the last 3 times, and I'm betting it's going to happen again. So they'll do 25, and then we're going to get flat rates, and we think flat rates markets enjoy. And we've covered all this a lot in previous videos, so I don't want to get back into it. So that's all I've got for you in this video, guys. Hopefully now you're ready for the week ahead. You've got a good understanding of everything going on, and you're looking forward with optimistic eyes. We will see what happens. Ultimately, the market is the ultimate decider. On that note, guys, I'm going to love and leave you. If you've enjoyed this content, a like is always appreciated. So is a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents. See you in the next.